So we all know that Wall Street's a big club, and we're in 1977, everything in the world of finance would change. It all began in 1977 when Bank of America and Salomon Brothers created the first tranche by betting on clients' credit for the very first time. Also the pioneer of the mortgage-backed security, Salomon Brothers was a contributing factor to the 2008 financial crisis by all of its innovative technologies that it created in the 1970s and 1980s. They were a leading innovator in advanced trading technology, and the charge was led by many relevant names that you will recognize that are still in play today. Let's go and take a look at some of the important roles and some of the important people that are involved in Salomon and just how much the breadth and scope is of their reign over the markets. First on the list is Michael Bloomberg, a name that you're probably very familiar with. Michael Bloomberg worked for Salomon in the 70s and early 80s where he was fired. He was responsible for financial development and was a key contributing factor in the developmental technologies that took place in the 70s and 80s for Salomon Brothers. After Salomon, he went on to create one of the largest news organizations still today in 2021. He created the Bloomberg Index as well as the Bloomberg Terminal. He also served as the mayor of New York City in the early 2000s. Interestingly enough, the primaries that were held for the first ballot that he was up for election for was scheduled for none other than September 11th, 2001, which obviously had to be rescheduled due to the attacks. Michael Stockman, back then a mortgage trader at Salomon, went on to work at places like Goldman Sachs, Morgan Stanley, which will be a common theme that you'll see with a lot of these alumni from Salomon, and then he moved on to where he is now the Chief Risk Officer at MF Global. John Bass, back then, was the Managing Director overseeing fixed income operations and sales at Salomon Brothers, and later Citigroup when it was acquired back in 1998 during the Big Bang mergers. Now, just as previously mentioned, we now have collusion at MF Global, as we have a second alumni now, after Michael Stockman, being John Bass, who also is at MF Global. And he is the global head of institutional sales. John Lipsky, back then the director of Salomon's European Economic and Market Analysis Group until 1992, later would join Chase Manhattan Bank, followed by JPMorgan, where he would then move on to IMF Group, where he would retire in 2011 as the managing director. Andrew Stone got his start as a mortgage trader at Salomon Brothers and was featured in Liar's Poker, a book written by Michael Lewis, someone we will bring up later, for his cunning ability to negotiate a higher salary as a starting analyst with Salomon Brothers. After Salomon Brothers, he went to Prudential, then Daiwa Securities, where he built up the mortgage and assets-backed securities department. Following that, he was at first Boston Credit Suisse, which would later be acquired by Credit Suisse International. Now, he works at Redwood Trust, where he resides as a chairman today. Louis Ranieri is no other than the father of mortgage-backed securities. He also headed the mortgage bonds desk at Salomon Brothers and was considered by many to be the father of mortgage securitization. He left Salomon in 1987. After that, he bought Bank Trust in the early 90s, and as the time of this document, had partnered with Shell Point Partners in about 2012, and was also considered to be one of the primary contributors of the 2008 financial crisis. Myron Scholes is one of the more important alumni to take note of. Before joining Salomon in 1990, he developed the Black-Scholes model, where he received a Nobel Prize for doing so. It's still today considered one of the most noteworthy and revolutionary models in financial theory because this mathematical equation estimates the theoretical value of derivatives. And we all know the mass amounts of derivatives that are in the market right now is the primary factor in why we are gridlocked and the Fed's up against a wall. It's estimated that there is around $600 trillion in derivatives in today's financial markets? Well, all of that stemmed from Myron Scholes and his model, and it was incorporated into the Salomon Brothers culture, who happened to be the dominant figure in Wall Street during the time. Not only that, but they did lead the way in revolutionary trading technologies and advanced systems. After joining Salomon, or after leaving Salomon, being the managing director for fixed income derivatives, he then went on to long-term capital, which collapsed at the brink of the Big Bang merger in 1998. The derivatives we see today are likely all due to this man's idea of the Black-Scholes model. Currently residing at Nika Partners, Tom Miglis was a big primary factor in the creation of Citadel's award-winning technology, quote unquote. Miglis got his start at Salomon Brothers in the 80s and was the chief managing director at the time. He was responsible for managing tech systems and development, and they were in desperate need of hardcore technology, as during that time there was a race for such technology in the financial markets. Later in the early 2000s, he would work with Kenny Griffin from Citadel to create what makes Citadel thrive today, their technological advances that allow them to do things such as convertible bond arbitrage, algorithms, and other financial tech that was teamed by Tom Miglis and Ken Griffin in the 80s to create what we see today, the monster of Citadel, where now it takes up the majority of options volume on the exchanges. David Salomon, a junk bond trader at Salomon Brothers during the 1980s, is now the current CEO of Goldman Sachs. Between that time period in the late 90s, he helped pioneer the Big Bang merger of Travelers Group and Citigroup, which ultimately led to the creation of Salomon Smith Barney, which happens to be the underwriter for GameStop. So the CEO of Goldman Sachs used to be a junk bond trader in the 1980s for Salomon, and now he resides as the top position of one of the most powerful banks on the planet. Time in between there also included a brief transitionary period where he worked at none other than Bear Stearns. Jamie Dimon first became relevant with Salomon Brothers in 1986 when he began managing financial operations at America and Salomon Brothers. He would later become the president of Travelers Group in 1993, where he worked with David Salomon later in 1998 to complete the merger of Travelers Group and Citigroup, which would later become Salomon Smith Barney. Now, Jamie Dimon is the CEO of the second most powerful bank on the planet, JPMorgan Chase. Robert Gensler was a bond trader at Salomon Brothers in the 1980s, and interestingly enough, has a twin brother that we all know very well, Gary Gensler, the former CFTC chair, former Secretary of the Treasury, or Assistant Secretary of the Treasury, and of course today is the current Securities and Exchange Commission chairman. Robert Gensler went on to work at T. Rowe Price, and during the time at his Salomon Brothers career, his twin brother, Gary Gensler, was working at Goldman Sachs at the time, and Robert Gensler would later go on to T. Rowe Price, who is now currently long on GameStop, interestingly enough. Michael Corbat, who also started his career at Salomon Brothers, would later become the Citigroup Global Markets CEO, where he would reside as CEO until February of this year, 2021, after the January events. And of course, we all know that Citigroup Global Markets ends up being Salomon Brothers because after the Travelers Group and Citigroup merger in 1998, the name became Salomon Smith Barney, which would later be dropped in 2009 after a series of IPO fraud scandals. Mohammed El-Arian began working at Salomon Smith Barney in the private sector in London after the merger in 1998. He would later become part of the faculty at Harvard Business School in the early 2000s, and then in 2012 was appointed to the Global Development Council by Barack Obama, where he currently resides as the chairman today as a member of the White House. Warren Buffett, one of the largest shareholders of Salomon in the late 80s, had an interesting task once the bond scandal of 1988 and the hearing of such scandal commenced in 1991. Alan Greenspan, the federal chair at the time, called upon Warren Buffett to come in, take over Salomon, and reform the company after a treasury scandal was founded by one of the traders from Salomon Brothers, where they were trying to corner the bond market and basically cause a short squeeze. After that was found out, Warren Buffett was called upon by Alan Greenspan to join the chair of Salomon, reform the company, as this was the first example in financial history of too big to fail as far as modern times. So once joining the board of Salomon Brothers, he was basically left to sweep up the mess that was created, and Warren Buffett at the time also provided a $5 billion bailout to Goldman. So Warren Buffett himself found himself in a position where he was bailing out two of the biggest banks on Wall Street at the time, and now he sits on the CEO and chair of the largest ticker on Wall Street, Berkshire Hathaway, and is also the largest shareholder of such company. Jerome H. Powell was also involved in the Salomon Brothers bond scandal of 1991. He oversaw the settlement and punishment and investigation of the Salomon bond scandal of the 1980s and early 1990s. The settlement? $100,000. Remember, this was the first instance where the public was aware that Wall Street had committed fraudulent activities, and they were giving a charade by putting on a public hearing where everything would be solved by none other than Warren Buffett, clearly making it known that the government at the time had no idea how the financial markets worked. Jerome would later help raise the debt ceiling crisis in 2011, and now in 2021, facing a very similar situation but a lot worse, Jerome Powell is now our Federal Reserve Chairman. Full circle. If all of this hasn't been enough for you, the 9/11 connections run deep within Salomon. Before we get to World Trade Center 7, let's take a look at the other trade centers. One World Trade Center, or the North Tower, included the Port Authority of New York and New Jersey, Marsh and McLennan Companies, Bank of America, Cantor Fitzgerald, Sidley Austin Brown and Wood, and Restaurant Windows of the World. Two World Trade Center, South Tower, included Verizon, the New York Stock Exchange, Morgan Stanley, Xerox Corporation, Keefe, Bruyette & Woods, Aon Corporation, and Fiduciary Trust Company International. 5 WTC included Credit Suisse First Boston, which would later become Credit Suisse International, and Morgan Stanley. 6 WTC included the United States Department of Commerce, Bureau of Alcohol, Tobacco, Firearms, and Explosives, and the United States Department of Labor. And lastly, 7 WTC included Salomon Smith Barney, owning a whopping 76% of the floor space during the 2011 or 2001 attacks, also by the U.S. Securities and Exchange Commission, Standard Chartered Bank, Secret Service, CIA, and American Express. The building was suddenly acquired by Salomon Brothers prior to the 1991 hearing over the bond scandal. So it happened right after the scandal was found out, but right before the hearing of 1991. Prior to the hearing, the building was renovated by creating a building within a building in the early 1990s. The SEC also made renovations, including adding 9 diesel generators on the 5th floor, as well as removing floors altogether. So let's recap. Salomon Brothers partnered with Bear Stearns, Merrill Lynch, and Shearson Lehman in the 70s, also known as the Fearsome Foursome on Wall Street at the time, who were all partnering with IPOs. Later in the 70s, Salomon Brothers created the first tranche with Bank of America by betting on client risk for the very first time in 1977. Salomon Brothers alumni included Michael Lewis, the creator of Big Short and Liar's Poker, also the creator of the first mortgage-backed security, Ranieri, the pioneer of derivatives, which led to the birth of Citadel Tech, being Myron Scholes, the primary tenants to the World Trade Center 7 being Salomon Smith Barney, pioneered by Jamie Dimon and David Solomon, CEOs of Goldman Sachs and JPMorgan, and then later the global expansion of currently held positions in places like Goldman, JPMorgan, Citigroup Global Markets, UBS AG, which those two are both the underwriters for GameStop, BNP Paribas, the White House, the Treasury, and the Federal Reserve, and much, much more. Salomon Brothers was the leading contributor to the flash crash of 1987, the 2008 financial crisis, and likely what we're seeing today, as the massive amounts of derivatives again were pioneered by Salomon Brothers. Salomon Brothers has always had close ties to the Federal Reserve System, and of course, the leading investigator during the bond scandal of the 80s was led none other by today's Fed chair, Jerome Powell. So what does this all look like on paper? Well, it looks a little bit like this. Salomon Brothers, fearsome foursome, and then everything else here, little mind map, all of the names or the alumni are going to be found right here. And I will link this in the description so you can take a look. But yeah, this is how connected it's all been. It all started seemingly from the first place, Salomon Brothers, which led to the pioneering of derivatives, which led to the creation of Citadel's technology, which led to the massive amounts of share that they have in options market and the general market. Everything in orange here is going to be a major corporation like JPMorgan, Credit Suisse, Morgan Stanley, IMF Group, Citigroup Global Markets, UBS AG, Salomon Smith Barney, the Big Bang of 1998 happens to be an event. The only ones that are not included are JPMorgan and David Solomon, David Solomon and Jamie Dimon, who created basically or pioneered the biggest merger in history, Travelers Group and Citi. So there you have it. I'll link this below so you can take a bigger look, but that's basically it. What a mess, huh?